All right, so we want to welcome everybody to the Aspirational Care Advisors meeting here on September 22nd, 2023. Troy, I think this is your first time, so we're going to give you a few minutes to introduce yourself to this illustrious group.
Well, thanks, Daryl. Glad to be a part of it, and nice to meet you all. My name is Troy Reichert. I live in Tulsa, Oklahoma. I started employee benefits about 15 years ago in Nashville as part of a firm that was nationwide, and quickly learned that renewal time was just like changing the deck chairs on the Titanic. It really didn't matter, and I became very frustrated. Learned the self-funding business, and eventually moved out to LA, where our company bought an agency, and then they moved me back to Tulsa to run their TPA. So been in benefits for a long time. Love the self-funded space. I also love direct contracts, and so been working on that the last 3.5 years. Went to work for a company called Coral about 3.5 years ago, and then left them about 6 months ago. Now I'm an outside consultant working with payers and providers in this space and working with brokers. So just a quick background. That's what I do.
Great. Anybody have any questions for Troy? Troy? If not, is anybody else I just shared the upcoming conference next week, but does anybody else have anything new that they've heard or learned about that they want to share with the group? Anybody come across any exciting new discoveries?
I've sat in on a group presentation this last week, a group called Sept RX, and what they do is they're strong in the space of and I'll be glad to connect you there, Daryl. Strong in the space of pharmacy clinical management, and they've taken it beyond that. But anyway, that's
okay. Anybody else?
So I'll mention a group that I can put their website in the chat. It's called Epigen Logic, and it's a group that I think, based on the research we've done so far, is far preferable to the sort of things we're hearing, like from Chat GPT, which I'm hearing that most people that we would work with in the healthcare space are scared to death of Chat GPT at this point in its development. But this Epigen Logic is something I think would be worth paying attention to, and I'd love to hear what you guys think about it. I'll put the website in the chat.
Anybody else worked with them before?
I've not heard of them. No.
They're pretty new in this space. Pretty new.
I was just wondering if anybody's had any experience working with a company called Patient, Paytient. It's a health payment account. It's interest-free, essentially kind of like a line of credit for employees that an employer can roll out, and then they can make a post-tax payroll deduction for medical expenses, essentially giving the employees a Visa card. The employer is not on the hook for any of it. They do pay an admin fee to set it up, but the employees can use it up to a certain limit that's determined with the employer and patient, and the unavoidable out-of-pocket costs can be paid using that card.
What's the advantage if it's post-tax? What would be the advantage of using a post-tax card versus a pre-tax?
Well, it's interest-free. It's interest-free credit because so many people avoid care because they just simply don't have the money.
So it's credit.
So it's essentially a rolling line of credit. So an employer can say, all of my 200 employees will have access to this. It gets connected to payroll, and when someone swipes the card, their average swipe is $118, and depending on the income level of the employees, or for example, under 50,000, under 75,000, or under $50,000 of earnings, 35% of the swipes are for prescriptions. But like someone's filling an $80 prescription, they might not have the money for that. So they might avoid it completely, but they can
Right.
swipe it. And as soon as they swipe it, they immediately get to determine how many pay cycles they want to pay that back in. So let's say they say, okay, I want to pay it back in 10, and $8 now comes out of each paycheck post-tax. Yeah, it's they have 800,000 members. They've been in business about 5 years. I just taped a podcast with one of the gentlemen there, and I think it's I mean, medical debt is terrible, and we're trying to build plans without out-of-pocket costs, but that's just not going to be a reality for everything. So I just was wondering if anybody had
Interesting
experience
concept.
with them.
Yeah, interesting concept.
Yeah.
Basically giving people a rolling line of credit.
Yeah, and from an employer, I think it's a lot of goodwill and a small lift. So it might help us open some doors for the other things we want to do for their health plans.
Yeah. So Vidar, welcome.
Thank you. Sorry that I'm late and I may have to leave a little early because we've got Health Benefit Nation coming up in Houston next week and have a little work.
We were just touting and promoting your conference. In fact, some of the members on the call were saying, "How do I get on Vidar's list so that I hear about these?"
Okay, great. Well, Daryl knows how to get you connected.
So maybe what I'll do is send out something to everybody that just says, here's how you sign up to get on the email list.
Yeah, sure.
I just got off a call with Jeff with a good friend, Robin Faust, who's put together a calculator using Milliman's projections of the impact of putting DPC in as a primary care. I found it very fascinating. So, of course, you can read through all of Milliman's expectations and predictions, but she's turned it into a very simple calculator or ROI calculator where you can say, okay, here's my group. What's going to be the, based on Milliman's projections, impact of just introducing DPC to my plan? And I thought, that was interestingly enough, I thought I'd bring it up to say, would you be interested in having Robin share that in one of our upcoming meetings so you can see her ROI?
I think that'd be great. I think that'd be really good.
Can we get online and test it in advance, or is it very complicated?
Oh, it's very simple. She just basically brought up a group that she'd already done all the scrubbing, so we couldn't tell the group was, and she just showed us how, if you can get 50% of your members in DPC, this is the ROI. If you can get 25%, if you can get 75%, you can put in what's your DPC cost going to be. So it's really just a way to see the impact of introducing advanced subscription-based advanced primary care into a plan.
Right. And a little more about Robin Vidar is I was, I've been working with her about 10 years, and she was one of the analytics companies that worked with the New Jersey State Health Plan. So she has applied this.
My Catalyst is the name of the company.
Well, that was her former company, was My Catalyst, and she sold it, and now she's continuing on with the company that acquired her.
So what's the new name?
I think it's Veracity Analytics or something like that.
Gotcha.
Yeah, but she's a great gal and got all kinds of accolades from Dr. Coop. Remember when Dr. Coop was in the administration?
Surgeon General.
Yeah. Remember that name?
Oh yeah, sure.
Coop.
I remember the beard.
What's that?
I remember the beard.
Okay, yeah, okay. Anyway, she's great, and I'll be talking with her a lot more because I know that the timing is real good for all this stuff that she's got. I know she'd love to share it with this group and see how it would help everybody.
Yeah, I think it would be good.
We use My Catalyst, Robin, and her team in a number of our groups.
Oh, you did?
Yeah, and just wanted to add that for Vidar or anybody else, just to
right.
It's kind of a credibility thing.
No,
And
Yeah.
she's diligent, does good work.
Yep.
Back on the DPC point, yeah, and but Milliman put out a white paper, official white paper in 2018. The only reason I remember that's because I use it pretty frequently, where they did quite an extensive study on DPC and its impact on costs, total costs on, it's a big, pretty concentrated piece of work. And they came up with average savings on total medical costs for a group is and it may have been pharmacy as well, was I think was 12% average, minimum 6% savings, maximum 18% savings. I suspect.
Well, and her ROI calculator basically applies to each section of your claims in an outpatient hospital, pharmacy, and I think it's specialist. And so it basically takes the Milliman projections and applies it to your group's claims and says, okay, if you get this level of DPC and engagement, this will be what your return on investment is, and la da da. So I found it fascinating. I thought this would be something that I think this group would be very interested in seeing.
Yep.
So today, this is a little bit of a different direction today, but I was talking to this gentleman, Tom Hemmingson, which we have on the call today, about something that they've created, and I wanted to kind of set things up. So I don't know how much you all have used the ICHRA, the Individual Coverage Health Reimbursement Arrangement that came out back in 2021. I'm guessing that many of you have not used it much, although it does create a whole new strategy for benefits for employers. It's mostly been used by small to medium-sized companies, but there's no limit. Any size company can use it. Very simply put, the employer just puts in an amount of money into the ICHRA for all of the employees, and the employees then go get an individual plan using their employer's money. And if they buy something that costs less than what's going in, then they keep that, and it just acts like it's a cash account that they can pay with pre-tax money, qualified medical expenses like copays and deductibles and pharmaceutical stuff and that sort of thing. So it's an interesting instrument. Jessica Brooks, and I think many of you know Jessica Brooks, actually used it with her group the last couple of years. One of the elements of an ICHRA is that you have to put in, if you're over 50 and you want to be compliant, then you have to put like at least 70% of the lowest cost silver plan in your area. Well, that makes it really kind of difficult to say, well, okay, so what is that? What does that look like? What do I need to put in to make sure I'm compliant? If I'm under 50, I probably don't need to worry about being compliant, but if I'm over 50, how do I do it? Well, Tom's company has created a very interesting product using AI and technology for an employer to simply say, here are all my employees, here are their ages, here are their zip codes, and it will figure out for every single tiny group of employees the amount that needs to go in from the employer, so the employer doesn't have to worry about it, and it facilitates getting help to those individual employees in signing up for the plan. So I probably have just destroyed Tom's introduction and product, but that's my vision of what Tom has created. I thought, well, that's pretty ingenious. If you as a broker have an employer who wants to really remove themselves from building a plan, and they don't want to do self-funding, they just want to literally say, get me out of this business. I'm going to give my employees money and let them go use the individual markets to buy a plan for themselves, let it work for them, and I want to be out of the middle of it. So with that introduction, Tom, why don't you kind of better introduce yourself, your background, your company, and do a presentation, and we'll jump in and ask questions.
Yeah, no, thanks, Daryl. It was a great summary of our previous conversation. And yeah, I was really excited to join and meet you all. I think Daryl and I really saw eye to eye on like the care and approach that you all take for your customers, and really being a great way to provide healthcare to folks, and that's really our goal at Thatch as well. And we're doing that through, you know, the law of ICHRA. And so, yeah, really excited to tell you more. You know, first and foremost, just hearing you all talk, I know there's a lot of knowledge on this meeting, and there's a lot of folks that know more than I do. So I know Thatch well, I know some of the technology side really well, but please interrupt me if you have any questions or any thoughts. But yeah, just from a background perspective, so I have sold enterprise software solutions to HR for the last couple of years. I was in the contact center space, but I've primarily worked at tech companies. I'm located in the San Francisco Bay Area and have been here for pretty much my entire life. And Thatch is a kind of a venture capitalist backed Silicon Valley company. And we've taken a really technology first approach to this way of ICHRA. And so, you know, we saw that ICHRA, like Daryl said, could be a great way for companies to kind of get out of the healthcare, like providing healthcare if they needed to distance themselves a bit, and also offer some potential benefits for the employees as well. But we saw kind of a gap of folks that were doing it and the lack of technology. And so really at Thatch, we take a technology first approach. We have amazing engineers and coders who truly some of the best in Silicon Valley, and we've been able to leverage them to create a really nice product for our folks. So yeah, that's just kind of the quick background. I think I'm going to go through a quick presentation just to walk through like kind of the journey for an individual employer and what that would look like. And then I can actually show the product as well, go through a demo, but please interrupt me if there's any questions. And just to kick things off too, anything that's pressing that you all want to ask or learn more about before I jump into those two items?
Doesn't look like it. Go ahead.
All right, sounds good. Let me share my screen. Okay, can everyone see my screen?
Yep.
Great. So yeah, so like Daryl said, especially like small businesses right now, some more medium-sized group, you know, in the like low mid hundreds are using an ICHRA through Thatch. And so this is kind of walking through the point of view of someone who runs their own business, or a CEO, or even an HR leader. And, you know, particularly we're seeing a lot of success here across multiple states. I'm sure as you all have seen with some of your clientele, if you do have folks who have employees that range across multiple states, you know, sometimes for small groups, getting a plan that works for all different carriers can obviously be somewhat difficult. But with Thatch, like what happens is you can get healthcare in really 5 minutes. And so these companies can distance themselves from the situation and provide a budget, connect their payroll, connect their bank account. And after that, that's all they need to do. So then we help employees, they go in, we actually have all the plans from the marketplace, some off exchange plans as well. They go in, they select a plan that they think makes the most sense for them. And everyone gets to choose the plan they like, right? So you can have different carriers, different types of plans, et cetera. And like Daryl also said, the different dollar amounts, which I'll get to a bit more in the demo. And one other point that's really interesting that employers have really liked, and the employees too, which is what Daryl mentioned, is this ability to like provide that healthcare budget with an ICHRA. So being able to say, hey, for this employee in particular, we're going to give her $600 a month to go spend on her healthcare, right? And especially for some people, hey, maybe you don't go to the doctor too frequently, you don't have many needs, like, do you want to use that full $600 amount on, you know, a gold PPO or something where you go to the doctor once a year and you're not really getting much out of it? And so with this ability to use an ICHRA, and specifically how we facilitate it, the employee can choose how much they want to spend on their premium. And then if they have any leftover allowance, they can use that on qualified medical expenses. So, you know, like an HSA, it doesn't have the investment mechanism and it doesn't roll over on an annual basis. But all the qualified medical expenses are the same as an HSA. So we're seeing
Tom,
folks
can I interrupt you?
Yeah, go ahead.
So in HRAs, you can draft an HRA to roll over. It's been my understanding that you can do the same thing with an ICHRA. are you saying that
The
it
qualified
can't
medical,
roll?
the allowance amount. So that, yeah, the allowance amount can.
So if I have money left over at the end of the year, I can't build an ICHRA that allows that money to roll over?
Correct.
That was not my understanding. So you just clarified something. I'll have to go in and just a little bit more research, but I thought you could allow that to accumulate, but maybe not.
Okay. Yeah. Yeah. We're on the qualified medical expenses, like that leftover piece. I'm pretty sure of that. But totally new space as well. And so yeah, if there's anything, I can double check that. Let me know if you find
Okay.
anything too. Yeah. But what we're seeing too, though, is there's a lot of value for employers on that side, because if it doesn't roll over on an annual basis and they're upfront with their team, like they can have an HSA as well, right? You also don't have to have a high deductible plan to use this model. And so they could have an HSA if they more want to do something that is going to roll over.
Right.
But with this, they could have, not a high deductible plan, and you're still getting that value. At the end of the year, that money does go back to the employer. And so from the employer's perspective, they really like it too, because they are ensuring like, hey, I'm giving this healthcare amount to people. And if they're not totally using it, then that's kind of capital efficiency back in my pocket. And it's actually, it's not similar to Patient, the company that was brought up, but we also have a Thatch debit card, a Visa debit card. And so each employee can get access to that, and they can just go ahead and swipe it. And this is where, when you think about Thatch and our technology focused, we're kind of like a financial technology company as well as the health technology side. And like this Thatch card is an example of that. So let's just use this as an employee's perspective. Let's say they go into the store. One, if they want to know what is a qualified medical expense or not, agree ChatGPT is not amazing for everything. We integrated with ChatGPT, but we just took all of the list of qualified medical expenses. So we put our own integration into it. So they can actually text us and say, hey, is this a qualified medical expense? Is this a qualified medical expense? And we'll respond automatically and let them know whether it is or not. So that's one thing that people like to use. And if it is, they can use their Thatch card, and we'll take it out of the allowance on a pre-tax basis. If they don't really care about it and they just want to go in and use the Thatch card because they're like, oh, I think I have some allowance left. I'm buying SPF 15 chapstick. That's a qualified medical expense. I swipe my card. Let's say it actually isn't a qualified medical expense. The transaction won't get declined. We will just take it out on a post-tax basis from their payroll, because we're integrated to their payroll automatically. So the goal is for the employer and for the employee to take out some of the complexities and be able to just say, you swipe the card, great. If it's pre-tax, we take it out of the allowance pre-tax. If you're over your allowance, we take it out post-tax. If it's not a qualified medical expense, we take it out post-tax. Yeah, a lot to cover. There's a lot that I just went through. So I just wanted to pause here, see if there's any questions or thoughts on anything I've covered so far.
I have a question, but it's a bit out there. So now or later?
No, now's
you great.
Yeah, now's fine.
You probably got a sense, and all your investors do, for the trend away from group benefits with groups between 20 and 150 employees. And could you weigh in on that? What are you thinking the people who are in the know, you being included, would expect that to be over the next 5 or 6 years?
Yeah, it's a good question. There's been numbers that have been thrown around. The latest I've heard is by 2025, I think it's like they're picturing above 10 million or so in the ICHRA space. So, I mean, it's about 200,000 right now. So that would be pretty astronomical in my mind. I think that, but it's trending in that direction just in terms of a year-over-year growth. So yeah, that's kind of
Is that
what's
the
been
number of
talked about.
lives, Tom, or is that the
Lives,
number of
yeah.
employers?
Lives, yeah. So still a long way to go though in terms of the entire market. And hopefully with new solutions like that, we can help, push the envelope a bit and help the adoption as well.
Thank you.
Great.
Yeah, of course.
What's the largest employer that's used this so far?
Yeah, it's a good question. So largest for us let's see, probably about 300 lives is the largest. And so for them, it was actually what Daryl was speaking about. So this was through a partner. They had a customer who was already on an ICHRA because they were facing really high annual premium increases, wanted to get out of it. And then we were able to go in and do this cost analysis to, again, create very specific allowances for all the different zip codes and ages. And yeah, I'll get into that more, but that was kind of the why behind it for them.
The law was written to where any size company that wants to do it can do it. So the law basically says any employer can use the ICHRA.
Mm-hmm.
I put several ICHRAs together.
Have you?
I have just a couple of observations though as you do it, and I'm interested to hear more about Tom's program, whether they're the act as the employee and employer portal or not. But one of them was actually, well, I should tell you guys, this really works well in a smaller type of organization like retail or restaurants. It works terrific in those. I did write a school district of about 165, and it turned out to be a disaster. And the reason for it was, believe it or not, these teachers and staff wanted the employer to make decisions for them. They didn't want to go in and have to choose the plan that was suitable for them. So they had to, there were like 30 some plans available in the state of Colorado, maybe a handful of insurance companies, but you've still got your bronze, silver, gold plans, your high deductibles, your traditional PPOs, yada, yada. And that was the biggest fallout. The savings were phenomenal to the district. In fact, the superintendent gave everybody top to bottom a 15% raise.
Wow.
But the fallout was, we don't want to make decisions. The other thing you guys know, and Tom knows this, is that every calendar year, people have to go back and re-enroll in the plan, because there's rate adjustments, there's plans that come off, plans that come on, and companies that come on and off. So there is a little more, I'll just say, instead of having a renewal like you would with a group plan, you've got, 20 renewals or 165 renewals or whatever. So just a couple of observations for you, but I would tell you in the small under, well, it doesn't really matter, but under 20 in the retail space, restaurant space, it's well accepted.
Frank, this is Vidar. Would you say that the plans that were successful were restaurant workers and retail that were going from no insurance to some insurance that they have to work for a little bit, whereas the teachers were going from full insurance to something that they had to really study themselves?
I would say that's pretty accurate, that they had to study it themselves and pick the plan. Right now, it's all for any business, it's about attract and retain. So my son has 3 restaurants. We put full benefits in a couple of years ago, ICHRAs. And I mean, it's a defined contribution and he puts it in. These kids, I mean, they're kids. I call them kids because they're a whole lot younger than I am. But, the restaurants typically don't offer benefits, and they're trying like hell to find people to work. So putting in something like this, whether it's a $600 a month or $375 a month, it's more than they have. And I've had a number of these employees come up to me and say, thanks for putting this together. They appreciate.
case studies that you'd recommend that we look at? Because to me, for someone who has been fully insured, this looks awfully scary and complicated. Who do they call? Like, who does a teacher call when their chapstick charge is declined?
Tom, you want to jump in?
Yeah. Yeah, no, I mean, it depends on the model. We have, licensed health insurance agents within Thatch that can help with any claim issues that do come up. And then sometimes we work with partners who want to help with that as well. But we,
give me an example. So who do they call? I'm a teacher. My chapstick purchase of $2 was just declined, and I wanted to go through.
Yeah, they could call us first and foremost, and then.
Well, and Tom, didn't you say it would not be declined? Because
no, okay, no, but it was.
Yeah,
but it was taken out of my salary, and I want to get a deduction for it. You made a mistake, Tom.
Yeah, and that's where we would help. Like, we are the source of truth for them from a customer experience perspective. So they come to us first, and then if it's a payment thing, if it's something on our side, we have customer support, etc. If not, then we could work and call on behalf of them on the carriers as well. We are the broker of record, so we could call and work with them on that.
What phone number's on the back of that Thatch card?
That is, I think it's our customer support line. But we have we have another model where, everyone gets, like, we're emailing the HR team and everyone, and they see our numbers, they have our support email. And so when we roll out Thatch, we provide different ways for them to contact us as kind of like a typical software company. But that's a good point too. Like, we should be on the back of the card. Yeah.
Tom brings up another good point. Where you've got, like in Colorado, it goes by county, actually. The plans that are available by county, but I don't want to take the time to get licensed with 5 or 6 insurance companies. So having somebody like Tom be the broker, I can just add on a per employee per month fee.
Yeah.
And those guys, and then Tom and his company, they can go through all the application paperwork with a variety of insurance companies.
Well, and Tom, go into that. Continue with your presentation to talk about how you use your technology to build out an amount for almost every single person gets their own unique amount.
Yeah, exactly. So let me show you what the product looks like. So this is like on our website. We actually have people that, just find us and self-serve. They're like, oh, this ICHRA sounds cool, or they're a small business, they want to get started, and they could come to our website and just click sign up and go through the whole process without even speaking to us, end to end, from getting onboarded to actually purchasing their plan. So just a few steps: you connect your payroll, you add your business details, you set a budget, and I'll get into the allowance calculation there, like Daryl mentioned, and then you can connect your bank account. So it's pretty straightforward there. So we connect with.
And that takes, I think you told me, Tom, that only takes 10, 20 minutes to go through that process you just went through?
Yeah, I'll run through it right here. So let's say they have Gusto as their payroll provider. As long as they have their kind of Gusto login information, they can just go right here, they enter that. So if they have their admin profile, and we can obviously help them too. We bring in their business details from payroll. Typically, always need to have the EIN handy. They add their business. And this is just version 1 of this. Our team actually demoed it in our all hands today, which we're going to be releasing in the next few months. And so this allowance calculation is really a major value add for our partners and for our customers, because what we're doing is, one, like, there's a couple things with ICHRA, I think that are challenges, like you mentioned, Frank. I think one of them is, like, what amount do I offer? Like, how much do I offer? Right. It's great for cost containment. If going into a year, I only want to offer this much per person, then great. That's a pretty simple answer. If you want to understand how you can provide quality, whether it's like above 50, like Daryl said, and you have to have, 70% the lowest silver, like, okay, you want to make sure you do that. But anything above that, what kind of benefits do you want to offer? And I would say the second is like the decision support on plan selection, like you mentioned with the school district, right? So I'll get to that a little bit later, but just for now on the allowance calculation, what we're going to do. So the first version of this is just looking at places in California. That's where a lot of our customers are. And so we just looked at all the plans and said, hey, if you want to cover 80% of all plans in California, then this is the actual amount. The next version of this is actually allowing them to, especially for small businesses, connect their payroll, like you saw in the step before. We pull in their census, we look at everyone's zip code, and then from there, we're actually calculating this based off of their true employees. So if they have some employees in California in one zip code, some in another, some in Texas, some in New York, we're looking at all of that data and we're saying, if you offer this amount, that would cover all of it. Now, the next level down is the ability to do it on each individual person that creates a discrepancy between a dollar amount. So we can literally create infinite classes of these different solutions. So you can have all different classes here. And we could say, okay, there's 150 people. Let's use this 150 group that we're talking about. They were on an ICHRA before. They were using another ICHRA provider, and they could only offer 4 types of classes. And why is that? It's because they weren't using technology. With us, we offer infinite. So we looked at everyone, and for every single person where the dollar amount would be different, we applied zip code, age, and we had a very specific allowance for that class. We could do that across all 150 people. Going from that model, going from the 4 classes to that model, saved them about $100,000 just in 1 year. And this was for 150 life group and offering ICHRA apples to apples, but we can just get very specific with the approach there. And yeah, it's a huge value add for partners and obviously the savings for customers as well.
Stop there and let's see if anybody has a question, because I think that's really what's so magical about this is the ability to build infinite number of classifications. So you're still being compliant, but everybody's getting an amount specific to their age, their zip code, and their county. Anybody have any questions?
Can you talk about how it's utilized with healthcare sharing?
I was telling Tom the other day that here's my 2 cents worth. You simply say to your employees, here's the ICHRA. Now, if you want to do sharing because it has to be post-tax, then I'll just simply not put the money in the ICHRA and I'll take taxes out and I'll give it to you for sharing. That would be my response. But Tom, you want to add?
No, that's exactly. Yeah, it's exactly it. Yep. So yeah, the next step is, so again, a lot of stuff there. You set your budget, you set your coverage start date, and then next step is you connect your bank account. So again, from a reimbursement perspective, this is where, again, we're the financial technology solution. So people don't have to put down their individual cards or anything. Like, we're handling all the payments behind the scenes. And so we need to connect to their bank account to make sure that we can handle all of those reimbursements. And debit them at the end of each month for the cost of that. So connect to their bank account here. And then they
when
are
you say
also
their bank account, is it the company's bank account?
companies.
Okay.
Yeah. Companies. Yeah. The company's bank account. Yeah. And then we're all set. So then all they have to do as the employer is invite your employees. So when we're integrated to payroll, we'll pull in their employee roster here. They invite their employees. And then that's all they need to do as the employer. I can go through the employee experience, but just wanted to pause, see if there's any questions on that flow.
So, Tom, I've looked at several different ICHRA administrators and their portals and stuff. And there are differences for sure. Do you collect one check from the employer and then distribute it among the insurance companies? Or I've got another one that is doing the individual ACHs every month for each individual employee. So
Yeah, we
query.
do it by employee, but we only use ACH if the carrier only accepts ACH. Otherwise, we do debit cards through the Thatch card essentially too, right? So we're spinning those up and then we can set up auto pay. And then we're reimbursed and then we're debiting the employers at the end of the month for the amount that they are, giving to their employees.
What about the premiums?
Yeah, the
I
premiums
think
are
that's what he was
included in
talking
that.
about.
Yeah,
That
yeah,
was what he was
sorry.
talking about.
Yeah. So the premium, so the first step is at the end of every month, we look at just the amount on the premiums, and we have debit cards set up for each of the carriers, and we enable auto pay. And then for the qualified medical expenses, we'll debit those as well if there are any on top of the premiums. But what happens, like Frank we'd have to get into too much. Again, would love to talk to you, more specifically, see if there is anything we could help out with. But one thing you don't have to do with Thatch is, besides qualified medical expense reimbursement, like like sending substantiations, which obviously you have to do, we don't require anything from the premiums. So you don't have to send in like an Excel sheet on a monthly basis with, hey, here's what we did or anything like that. We handle kind of all of that for you.
Okay.
Yeah. So then on the employee side, it's pretty similar. They log in, they see their budget. Again, this budget, if we do infinite classes, is specific to them. They just enter in their information, kind of create a Thatch login, create their account, set up a profile, some basic information, create their profile. They can obviously add dependents. And then this is where we're in the really early stages. I think, like you said, Frank, like for larger groups, the decision support, how do you help them narrow down this amount, right? And so for us, we're building out decision support where, of course, we'll ask them a few specific questions, help them understand, like try to narrow down the plans. Right now, we have licensed health insurance agent who can get on the call with anyone who has any questions too, and walk them through the different plans and make sure they feel comfortable. So some of our customers prefer that, others go through this, but decision support is something we're going to be working on in the coming months to really help them understand, like, hey, how can we narrow this down as much as possible? There's so many cool things you can do with this eventually. That's all on our radar. I think being a tech company, we're going to get to, but for example, being able to connect to, like, this is pipe dream stuff, but it's cool, fun to talk about with all of you, like being able to connect to their previous year's type plan and spend and how they used it and say, hey, based off what you did last year, here's probably a type of plan that you should actually do this year, right? Or if you think there's going to be any changes though, let us know. And so again, we're going to continue to innovate on the plan, the decision support side, because that definitely is something where people aren't used to as many options, and you get the benefit of that, but there's obviously kind of the choice that needs to occur as well.
So Tom, I've got a question for you. If I, the employer, going to give you 70% of the lowest silver plan in the market, and so instead of giving you $709, I'm giving you $200, and I choose the 366 premium, that difference now will automatically come out of a payroll deduction, correct?
Correct. Yep, exactly. So you'll see, like, this is just, you see some of the plans, again, pretty straightforward now. But what happens at the end of this, we have vision and dental as well. At the end of this, you'll see, okay, I purchased my plan, Daryl, first, like, hey, I'm under the amount, right? So I get $284 a month. I can use my Thatch card, qualified medical expense, takes it out of the allowance, pre-tax, don't have to think about it. Not qualified medical expense, post-tax, out of your payroll, doesn't eat into the allowance. If you go over the amount, then we also take that out of your payroll automatically as well. And so this is, again, kind of the difference between a lot of other folks in the space and just like administering ICHRA on your own is the employee's just done at this point, right? We set up auto pay, we have everything else set up, and then, they don't have to put their own card down or do anything. And we're just pulling the funds the right way and applying pre-tax or post-tax and handling all of it for them.
Tom or Frank, are there any white papers that cover this? Case studies, anything like that? YouTube YouTube videos.
Yeah, there is, I would say, like Vidar, we do a pretty poor job of it right now. We've really been focusing on the technology front and building that out. We're now starting to really focus on the content and the marketing side in the coming months. So we have like a resources page that's pretty straightforward. But if you just do some research on ICHRA, on Google, on YouTube, like there's a lot of really good content. But yeah, I've been telling my team, hey, we need some more Thatch branded stuff too, because we have the technology, but as you know, there's a lot of content you need as well to bring this to folks.
There's
Who
even
are the three biggest administrators that you compete with? The three biggest competitors.
Yeah, I would say like the most well-known ones, and they have amazing content. Like some customers of mine, they use Thatch and then they use some of their content, which isn't a great look, but at least they're using our product. So Take Command is one. I would say that probably People Keep, and then maybe Task, and then there's a couple other smaller ones as well. So yeah, there's a number of competitors out there. Most of them have been around for a lot longer. So Thatch has been around for about 2 years. We're just really going to market over the last 6 months. So, we're new. But again, I think like from a technology perspective, our approach is a little bit different.
Well, I thought the laws for ICHRA just were passed, and what have these companies been doing for, if they've been in business for many years? What else do they do?
Yeah, like People One Health, or not People One Health, People Keep has been in the space of, I think, MSAs for a long time. So they kind of just morphed into including ICHRA as one of their
Exactly.
products.
Okay.
Yeah.
And People does have some pretty good content.
Oh yeah, they have really good stuff.
I got a roll here at 3:00, but I have two questions for you. One is, what states are you guys pulling the plans from? How many states?
All 50 states. Yeah.
Okay. And secondly, when you were scrolling through the plans, do you have the ability to put side-by-side comparisons?
No, but that's part of the decision support work we're going to be doing. So yeah, you're looking at the crystal ball, Frank. Yeah, you need to be able to have that functionality. Yeah.
Great. No, I'd like to.
Well, go ahead. Do you have another question, Frank?
No, I'd like to hook up with you sometime.
I think what they've done is eliminated what I've always said is the biggest problem with an employer using an ICHRA. And that is if I'm just gonna give you an ICHRA and then send you on your own out to the individual insurance agents to try to find a plan, oh my gosh, you are gonna be pestered till the end of time. So they've eliminated that big black eye.
Yeah. No, I mean, I'll put, I mean, I think Daryl would love for you to send my email to anyone. It's, again, we're a small, but I would say, especially on the product side, mighty team, but I lead everything sales and partnerships and customers. And yeah, if anyone has any particular questions or wants to follow up, I would love to continue to talk more as well. And yeah.
Anybody else have any questions? I'll put Tom's contact information on the advisors page when I put this recording on the Aspirational Healthcare Advisors page. Anybody else have any questions for Tom?
Thanks for the update. Thanks for the
presentation. This was great.
I've got one last question, and it has to do with HSAs. Is there a place in there where I can say, I want to use my HSA, only serve up HSA qualified plans?
Yeah, exactly. Yep.
It does not help them set up an HSA account though, right? That's something they have to already set up, or do you help them with that?
No, so we actually have an HSA offering as well.
Yeah.
The only thing it doesn't have though is it's pretty novel because we don't have the investment piece yet. Yeah, it's something we're looking into, but just with the opportunity for ICHRA, we're prioritizing the major items that continue to move in that direction. But you can have, an HSA without the investment piece, just employee contribution and rolling over on a monthly basis or yearly basis.
Great. Awesome. Thank you,
Yeah.
Tom.
Yeah.
Appreciate
One
it.
other
Thanks,
thing.
everybody, for jumping in. Yeah, go ahead.
One last thing to plug too. I think like what's interesting, would love to hear your all's perspective. And again, email me if it does seem interesting. But again, with this kind of allowance calculation, I think one thing that potentially could help folks like yourself is obviously you may know automatically like which kind of companies an ICHRA could work well for or not. There are definitely cost savings depending on states in the individual market, right? So sometimes costs are much cheaper on the individual market. And so kind of that allowance calculator I mentioned, I'm thinking a kind of partner facing tool where you could put in your book of business, ingest the census, and then we run an analysis on the census based off the current group plans to see, are there any cost savings by switching to an ICHRA as well? And so that's something where it's kind of helping you analyze your book of business to say, like, where are those potential areas of improvement to where I can go to them and say, you know, this is potentially cost savings. But yeah, lots more to build and do, and we're open to a ton of feedback. Again, thanks for allowing me to come on the call. Like, the experience on this call is truly amazing, and yeah, would love to keep talking to you all. So definitely shoot me a note.
Awesome. Okay, thanks everybody. Appreciate it.
Thank you.
See you
Thank
next
you.
time.
Good weekend, everyone.
Thank you.